Welcome back, dear learners. Before the ad break, we did trading stock deficit. Now we're going to look into packing materials not used, packing materials that would not have been used at the end of the financial period. The total of packing material, stationery and consumable stores in the general ledger reflects their value purchased during the year and not what was actually used. It is very important to note that the packing materials, the stationery and the consumable stores that we see in the ledger is what was purchased. When a business buys packing material, stationery and consumables, they are treated as expenses. It is also very important that you note that these are expenses to the business. And then at the end of the financial year, any packing materials that will not have been used, which is determined by physical stock take. Remember, the physical stock take, we do it at the end of the financial year. When we count every item individually, then we get to know how much we have. Therefore, whatever that will not be used will be regarded as a temporary asset that is on consumable stores on hand. It will only be used in the next financial year. That is what we want to see, to be able to see how much was purchased, how much was not used. Therefore, it will help us to determine how much was used. The matching principle is therefore applied when we are looking at our packing materials. We will now see how can we record in the general journal. It reads, an extract from the pre-adjustment trial balance on 28 February. We have packing materials, 1,960. We are then told, physical stock count showed packing materials of 180 on hand. So this is what was purchased, but we have 180 on hand. In the general journal, we therefore come and debit consumable stores on hand, 180. Remember, we said it will be regarded as a temporal asset. So we're going to debit it, therefore. And then we'll credit packing materials, 180. By doing this, we are decreasing the expense that we had on packing materials. Hence, we are crediting our packing materials. After having completed your general journal, it therefore becomes easy for you to post to the general ledger. Let us see how we can do that. In my general ledger, my packing materials is an expense. Therefore, it will increase on the debit side, but it will decrease on the credit side. So I have the total brought forward, 1,960. This is the packing materials that we purchased during the year. However, we are told that we have consumable stores on hand now, which is 180. It therefore means if I close off my ledger account, I'm getting the total. It becomes 1,960, 1,960. The difference becomes 1,780. This is what I then close off to my profit and loss account. This is what was used in this financial year. When I come to my consumable stores on hand, I then have 180. I'll debit this because remember we said it will be treated as a temporal asset. So I will debit this particular account. And then in my profit and loss account, remember this is packing materials used, 1,780. That becomes the expense for this financial year on my packing materials. Hence, when I come to the profit and loss account, I am debiting it because this is the packing materials used. That is my expense on packing materials for this financial year. We will now come to the accounting equation. On the accounting equation, it is very important to note that consumable stores on hand will be debited because remember, we agreed we're going to treat it as a temporal asset. That means on my asset, it's going to be a plus 180. And then I'm going to credit my packing materials. I'm decreasing my expense thereof. That's why when you come to your owner's equity, you see it's a plus 180 because I have decreased my expense. Thank you so much, dear learners, for joining me in today's class, and I hope to see you again soon. It is goodbye from me.